Guys. Hey everyone, thank you for joining for today's webinar. Welcome to CoinList Chats, the Smart Contract Wars. I'm Andy Bromberg, co-founder of CoinList. As a reminder, we're the platform where the best digital asset companies run their token sales. Plus, we are launching an exchange, which you can check out at coinlist.co/trade. But more importantly, we are very lucky to have Egan and Tom Shaughnessy here to talk with us about the growing and very competitive Layer 1 protocol landscape and what's going to happen over the coming year or so. We'll kick it off with some intros. Ash, do you mind introducing yourself?
Yeah, and thanks for having us on today. So I'm a venture capitalist at Accomplice. I was previously at Consensus Ventures. Accomplice, we're a generalist early stage venture fund, invested in things like DraftKings, PillPack, AngelList. On the crypto side, I'd like to break it down into two main categories. One are our crypto-enabling companies, proud investors in CoinList, Bison Trails, FalconX, Simplex, Taurus. And then on the protocol side, which I'm sure we'll get more of the attention today, Near Protocol, Coda, and Flow by Dapper Labs.
Awesome. Hey guys, Tom Shaughnessy here. Andy, thanks so much for having me on. I'm one of the co-founders at Delphi Digital, so we focus on institutional crypto research. We spend a lot of time in the weeds researching a lot of the protocols, a lot of the dApps, a lot of the businesses built in the space. We do spend probably more time now on the things being built on top of layer ones, just because it's where a lot of the action has been. We focus a little bit more on liquid tokens here, but excited to dive into this because it's a topic we've been covering for some time.
Awesome. Thank you, guys. Yeah, as you all heard, Ash and Tom are two of the best people here to talk about these issues. Ash has been investing in protocols for the last couple of years. Tom has been in-depth researching them, publishing all sorts of reports, which you should check out at Delphi to see more. But for now, we'll dive into it. For the audience, first of all, if anything is going wrong, we know webinars can be a little iffy sometimes. Just ping us in the chat box down at the bottom, and we've got folks monitoring it, and we'll make sure it gets fixed. And as we go through this webinar, we're aiming for this to be about 45 minutes or so. We'll see how we do on that, keeping it short. Feel free to enter questions. There's a Q&A box at the bottom of the screen, and as we keep an eye on that box, we will plug some of your questions in and answer them. But to start, I'd love to hear from each of you on a little bit of context on the overall Layer 1 landscape that stands today, and then we can dive in from there. Set the stage for us. What are the big things that everyone should know right now in terms of Layer 1 protocols and kind of these smart contract wars that are happening? Ash, I'll start with you, and then we'll go to Tom.
Yeah, so I think it's funny. 2 years ago, I sort of looked at every single white paper, all the teams that were building these base layer protocols with smart contracts. And I think that list was, I think I collected something like 80 white papers. And last night I went back to look at, what had launched, what was still white paper, what was testnet. And so I think today, a lot of the activity is happening atop Ethereum. There's only so many of these that actually are mainnet. I'd say Tezos is sort of the second case study, but a lot of these, we're looking at testnets, and it's just, you're looking at sort of the activity in a very different lens than you might look at Ethereum, which is mainnet, and some of these tokens and on-chain activity have been, we're sort of a couple of years in there. But it's interesting to sort of see, the teams that have been able to bring these concepts to fruition. And I'd say a lot of the things that were in these original white papers, maybe they haven't even been included in the mainnet or, upon launch. So I think, we're in a phase right now where over the next 6 months, we're going to see a number, let's say 10 or so of these base layer protocols launch. Maybe let's say 12 months just to have a little bit of wiggle room there. But, we're seeing a lot of, I think, the teams that what they wrote about 2 years ago or a year and a half or what it may be, we're in the time period when a lot of this is beginning to come to fruition. So I think we should have a super exciting next few months in our hands.
Yeah, I couldn't agree with Ash more. I mean, we wrote a post a couple of weeks ago, or maybe a month or two ago now, just kind of detailing all the launches and the dev activity on them. And there's a bunch. To Ash's point, there's, possibly 24 launching within the next 12 to 24 months or less now. And a lot of these projects are well-funded, have, really smart people involved. And I mean, these are projects from Polkadot to Hedera to Blockstack, all the way down the list. And a lot of these projects are launching very limited, phases, like Polkadot launched Kusama. Blockstack's continuing to enable functionality. Tezos continues to iterate and grow its protocol with upgrades. Ethereum obviously has ETH 2.0 rolling out in phases. So you definitely kind of see this. I think 2020 is going to see basically a few things happen. The three in my mind, or the few in my mind that come to head, is that one, a lot of these will go from white paper to testnet or mainnet. The second one is that they're all going to have to compete. And I think that they're going to compete very aggressively in 2020 and start attacking each other. I don't think it's going to be any more hand-holding with, we're friends with Ethereum, we're friends with Bitcoin. I think that's going to end very quickly in 2020 as communities realize that they actually need to garner dev share, mind share, and users from other protocols, because we're just not attracting developers outside of crypto yet, in my opinion. There's a couple other things, couple building blocks, including funding we're looking at, and network effects and dev capture. But I guess those are the main things I'm looking at.
Yeah, that's great. That's a really helpful overview. There's a lot of threads to pull on here. Ash, I'll start with something you said there. It does feel like we have to set the stage here with Ethereum as the dominant platform out there. Can you give us a little bit of color on where you think Ethereum is right now? You're investing in these other protocols. It feels like there's a sense that there might be other opportunities to chip away at Ethereum's dominance. What do you think is causing that, and what do you think is going to change with respect to Ethereum in the next year or so?
Yeah, I take a super optimistic view. Like, I think it's easy I just think the whole pie is going to grow much larger. I think there's probably 1,000, maybe a few thousand folks that are engineers who are capable of actually contributing at the base layer, consensus layer, for a lot of these protocols. And so I think, you hear about, okay, there's this new smart contracting, base layer that's launching, and everyone's talking about, can they capture DeFi, sort of the stuff that seems to be working on Ethereum. I actually think the whole pie is growing. Like, I think personal tokens, the ISA stuff is fascinating, Web3, DAOs, how it all breaks down, whether it's geographical, whether it's more of, sort of throughput, use case specific. It's tough to say right now. But I think, my view is I think the whole pie is going to grow larger. I think with these new protocols, you're just going to have a ton more sandboxes. And, I look at Libra, and I think Libra is going to be able to tap into a community that maybe, some of these more crypto native protocols, it would take, 5 years or so. So I look at it in a very optimistic lens. The pie is, X large today. I think it's going to be exponentially larger in the next few years, especially as these new sandboxes launch.
Yeah. So Tom, it's interesting because you were talking about this kind of competition, this head-to-head. What's your feeling, Tom, on this coming year, the balance between folks that are taking a strategy of let's grow the pie and tackle new applications versus protocols that are going to say we're going after something that someone else already has, and what do you think is going to be more effective there?
Yeah, I think Ash hit it on the head. I think we're going to see, I definitely think the pie is going to grow a lot bigger. And you just get that because you have new functionality, new chains, new abilities to interoperate with other things, bigger sandboxes, more experiments going on. So I definitely agree the pie is going to grow a lot bigger. But I do think that the pie is going to grow smaller on an absolute level on the number of chains we're interacting with. I personally just don't see a world where we have multiple layer ones competing. I like Ethereum, I like Bitcoin, and I'm not a maximalist on either. But when it comes down to it, it just seems impossible to me for a new chain with no community and no dev activity outside of maybe some VC funding to attract network effects, not only the dev side, but on the community ethos side. People tweeting memes, people going to meetups, people experimenting with it. It's very hard to do. Ash mentioned Tezos before. It's a great example. Extremely clean protocol, really smart developers, but it's so hard to code on it that it's hard to name a viral dApp built on Tezos right now. Granted, they're more in the infrastructure phase, but I do think that a lot of people in the space are significantly underestimating network effects and composability, locking them in. But to another point here, I do think a fast follower could work on the layer one side, because if you screw up the base protocol, you're kind of screwed. But a fast follower strategy for things built on top of a layer one, I think is a losing strategy. In my mind, that's like layer one trying to build a MakerDAO on top of it, or a synthetics on top of it. You're just too late at that point.
That makes a lot of sense. Yeah, you were almost reading the mind here. Catherine Wu asked a question in the Q&A here, talking about looking forward to the future of layer one protocols. Do you think it's going to look like a winner-take-all scenario, or do you think the protocol will be very app or usage focused? So, do you agree that Ethereum is for DeFi and DeFi only? And along those lines, what are you bullish on in the next 5 years? So, Tom, we heard a little bit of that from you. Ash, what do you think? Is it winner-take-all? Do you think it's going to be app or usage focused? What's the long-term division there?
Yeah, I think about this a lot, what the breakdown is going to be, if there's going to be a sole smart contracting protocol winner. Frankly, I just think it's too early to say. Like, we're still very much so in experimentation mode. But I do think, Ethereum's strategy, like replicating that, how Ethereum, the success it's had up until today, it's near impossible to replicate that, right? It was so grassroots. A lot of it was so organic. And I think that a lot of these teams have realized that in time, right? They wrote this white paper, we're going to get more throughput, more transactions, whatever it may be. But I think there's that realization, like, okay, maybe we can't follow that exact strategy. For us, one of the reasons we invested in Flow by Dapper Labs is like, these guys understand consumer and IP and partnerships extremely well. I think one of the best in the space. With Near, they have backgrounds in distributed systems, sharded databases, and all these things. I think when it comes to throughput, it's a fantastic team. Coda, they're focusing on this concept of a succinct blockchain. So as blockchains get more usage, they're going to deal with more bloat. Ultimately, potentially with more centralization, where Coda's approach, makes a ton of sense. So I think we could see a world where I think we're going to see a few, but it's just so hard to say given the stage we're at and still like a ton of experimentation.
Yeah, I absolutely agree with that. Let's talk strategies a little bit here for a layer one. So you mentioned a couple there, Ash, and Tom, maybe I'll ask you this. There's certainly a couple products and protocols out there. Ash mentioned Dapper. I think Cello's another one that are taking the approach of really dialing in on what the first application is going to be and building that themselves on top of their own protocol and shipping that, trying to get usage that way. There's others, many out there, whether it's a Tezos or maybe Ethereum itself, that are basically saying we're building a protocol. World of developers go out and build things on top of this, because at the end of the day, these protocols, if you think of them as products, really are kind of protocol to developer to consumer in order to reach adoption. Tom, what do you think the most effective strategies are going to be, let's say in the next 12 to 18 months, for gaining a lead in these smart contract wars as a protocol?
Yeah, it's a really good question. Ash mentioned Near Protocol before. I couldn't agree more. I mean, Alex and Ilya and the team are two of the smartest guys in crypto and maybe potentially the world. They're just believing with, knowledge. So I think they're amazing there. But as to your question on like scaling that, it's very, very difficult. So I do think a layer one protocol has to help build out some of these primitives, but it's not, in my opinion, it's not scalable because you only have so much time in the day. They can't be building a protocol and then building everything else on top. The other thing is that it just doesn't leave any room for that crazy experimentation that comes from having millions of devs around the world or thousands of devs around the world just experimenting. Like, we didn't get a MakerDAO or a Synthetics or all these layer twos built on Ethereum because Vitalik went out and said, I want to create Synthetics, right? They just created the protocol that allows for this crazy amount of experimentation and darts to be thrown so that they could see what works. So in that light, I do think the network effects and composability are hard to overcome. But as for strategy, I think teams need to focus on very specific, maybe even application-specific blockchain type uses where they have something in mind, they can go deliver that. And then for the broader community, they could not only keep them engaged, but keep them paid. So that's sustainable funding goes to these developers over time. They don't have to worry about paying their rent for 6 months, 12 months, a year, and they have the ability to kind of go out and build whatever their heart desires. I think that's important.
Yeah, that makes a lot of sense. And I actually think that is an interesting point to touch on, this funding for developers on a protocol, because that feels like one of the first major learnings from Ethereum that everyone kind of recognized, right? Ethereum launched, it's been built, and then as this next wave of potentially competitive protocols came out, all of them sat back and said, whoa, there's an issue here. We need to have some funding model. And so obviously Tezos has a model there that's been well discussed. How do you guys think about that model? Do you think the Tezos-esque model makes sense? Do you think there are other models that make sense? It does feel inevitable that there needs to be some sort of funding model in these protocols, but I think it's unclear right now what's going to be most effective. So I'm curious what you guys are inspired by.
Sure. Ash, I'm going to jump in?
Yeah, go for it.
So definitely agree funding is extremely important. I do think it's way harder to get funding in the space than people think, because if you're not launching a layer one, where do you go, right? And developers don't know how to do an ICO legally or an IEO legally, so a lot of them don't want to get involved. I think the grants process through the EF is pretty solid. They're pretty, they'll email you back if you email them. I don't know why people think it's so hard to get in touch with them, but I do think the more sustainable long-term models make a lot of sense. So Blockstack rewards their developers. I think it's up to $200,000 monthly for their applications. Decred has a treasury where 10% of block rewards go, and the community could vote on anything. Just download Decred, go in your wallet, vote or propose something. That's extremely solid there. And there's other ways to mess around with this, but I do think sustainable funding is key, but it has to be done correctly. So I don't know if anybody saw today, like Grayscale put out news that they're going to support the Ethereum Classic community. In my mind, I just read that as they're protecting their $8 million stake by making sure that the protocol doesn't go down. So, I don't really view that as sustainable funding. I view that as last-ditch effort funding to support your stake. But I do think that funding has to be directed towards developers as well.
Yeah, and just to add to that, I think, just throwing money, like I think with EOS, you look at sort of like the amount of capital that they're putting to work in attracting developers, doing these community funds. Yes, it's led to some type of success. Is it sustainable? It's too early to say, but I'd say, more of, you look at Ethereum and just like the grassroots, whether it's EF, you have sort of like, I love making the consensus to Ethereum, Red Hat, Linux type analogy. I don't think there's one perfect approach in terms of like, how should you be incentivizing folks to build businesses atop, your layer one. And I will say that a lot of the, there are potential venture type returns of businesses that are building atop Ethereum or other layer one chains. And that's, I think, from an investment standpoint, after, a lot of these layer ones launch, I think a lot of investors will be looking closer at, the DAOs, DeFi, whatever the on-chain type businesses come to fruition over the next 12 months or so.
Yeah, that makes a lot of sense. And, Ash, you were talking earlier about these different types of things that may pop up. So whether it's DeFi, which now feels like it really kind of exists on Ethereum, or it's newer things that aren't quite out yet. You talked about ISAs and kind of this personal funding model. You talked about DAOs. When we think about DeFi, which is, I would say, the most established type of product that has been built on a layer one protocol, Ash, how do you think about the world of competition for that? Because you've got Ethereum as kind of the dominant player there. You've got new blockchains launching like Solana that are, in some sense, focused on enabling those applications, many others. How do you think about what it is going to take to compete there, and what will decide the winner on the DeFi subspace of these protocols?
Yeah, I think it's a great question because you see so many different approaches. Like I am a big believer in the modular approach. The way I summarize it is sort of like within DeFi, you have the fat dApp approach. And I think like following what DYDX is doing by slowly sort of extending where they're sitting in the stack, doing market making themselves. And then you have more the modular, the Uniswaps. We saw sort of like Uniswap shut down its UI in the 8 countries, 8 or so or 10 teams spun up their own UI. And so I think there's a world where both can win. I do think that owning the users is super important, and but I also believe in specialization. Like if you're the best at providing liquidity or serving, a bunch of user-facing applications, like you can build an incredible business that way. So I think like it's so exciting because there's so much white space, and I think we spend a lot of time thinking around value accrual. Is it necessary to have your own native token, and then you sort of run down the regulatory path? Does it make sense? Obviously, like that's, I think, a separate conversation. But look, I think there are a bunch of different models that can be incredible businesses, and the fun part is like experimenting with that, and it's definitely a learning process for both the teams and obviously for investors.
Yeah, Tom, any thoughts on DeFi and how that subspace settles out?
Yeah, it's a really good question. I do think it's an interesting space in that it is being built on Ethereum today. I mean, there's no question there. I mean, Lightning's built on Bitcoin, but I don't know if I really consider that DeFi in a sense. I mean, it probably is by definition. I just view that more as a payment channel. But the thing that I think we're looking at when we do our research, to Ash's point, is can these tokens that underpin DeFi actually accrue value? So I keep going back to Synthetics. Just full disclosure, I own it. We have a report on it. But Synthetics' token is somewhat necessary for their platform, right? It backs all of the assets on their platform. The value of the token is kind of in a virtuous cycle in both directions, where if the token gains more value and becomes more valuable, you can have more derivatives on the platform. Token holders can earn more fees, stuff like that. And there's also kind of embedded type things there, like if your collateralization ratio goes too low, you can't collect rewards. So you kind of have an incentive to go out and buy Synthetics or to get your collateralization ratio back to even. So I do think there are novel ways that tokens are now beginning to kind of not tack on, but build value accrual mechanisms from the beginning and make their token kind of actually worthwhile for DeFi. And I think that's kind of a new trend we're seeing, because in the past, I think a lot of these projects launched without complete value accrual methods. I don't know enough about Augur, but I know V2 is coming out, and I'm going to dive into that. But I think a lot of projects are trying to fix their token econ in 2020 to kind of gain some value from DeFi since it's grown so much.
I think that's a really revealing answer, because it touches on something that we haven't talked about yet. We've been talking about kind of the protocols themselves and the technology behind them and the varying differences there. And then we've been talking about go-to-market strategy for these protocols. But there's this whole separate thing, which is, like you were talking about, the value accrual and the token economics of the system itself, which is almost an entirely uncorrelated field that these teams have to get right in order to be successful. And Tom, I know Delphi has a lot of reports in great depth on different token models here, which are worth checking out for all the listeners here. We were talking briefly about Nervos right before we got on live here, and we actually have a question from Francesco. Of all the upcoming smart contract platforms, Francesco at least seems to think that Nervos is the one with the best crypto economic design for value capture, and is curious for your guys' thoughts on, to the extent you've dove into that, is that a good one? Or separately, what are different protocols that you think have thought really deeply about this and have done a good job in building for the long term with value capture? Tom, maybe we'll start with you, and then Ash would love to get your thoughts as well.
Yeah, sure. So definitely haven't done as much work on Nervos as I want. I've read about them, more in depth yesterday about them, but still have to do some more work. But to your question, I do think their token model is really interesting. So my understanding is that the CKB token's their native token, and you use it to occupy state on their network. So it kind of bounds the growth of the blockchain and kind of adds scarcity, because you can only have so many tokens, only so much space. So that is really interesting. The other thing that's great that they're doing is they're implementing kind of an inflation tax or a state rent on token holders. And that's pretty cool, because it kind of rewards people for actually using the network or locking it in the DAO, because you pay less of a tax, I'm assuming. So that's really interesting. And, they really thought through their token econ, well. I mean, they have primary issuance, which, has a halving schedule every 4 years and has a finite supply. And then they have secondary issuance to support the miners based on that state rent and not so much transaction fees. So that's a really cool kind of way to approach security, because something like Ethereum is excellent, but Ethereum's entire future is pinned on transaction fees supporting the entire network, right? Because if you don't have enough dApps built on top, you don't have enough users, you don't have enough fees to validators, and it's just your security kind of crumbles there. So I definitely think their design goals are pretty interesting. We'll have to track them a little closer and possibly do a report on them and come back on.
Yeah, that's great. Ash, any thoughts from you on token economics and what models you think are going to be successful here?
Yeah, and I don't want to comment in particular on Nervos. I'm familiar, but haven't done a deep dive as of recently. I think like just to take a step back, I look at all of the, I think like there's this meme going around of eat this money, or what, name your base layer native asset, this is money. I think that that's great if that's going to bring new entrants and activity into the space. But the way I look at a lot of these base layer protocols is these are digitally native economies, and there are a variety of different participants, validators, developers, users, token holders, protocol, its governance. But ultimately, you're looking to get users, businesses, sort of what I call digital provinces atop these digital economies. And so, I think we can look at all of these white papers and, sort of chart out what may be. Ultimately, though, it's about getting activity on chain. And so, I think it's difficult to comment on things really beyond Ethereum around pontificate, because I think the most important thing is seeing them in the wild and, seeing what types of groups and businesses and what I call these provinces are going to come about. So,
Andy, I'm kind of interested in your take. I mean, you guys have some of the best leading projects on CoinList, like Nervos, Algorand, Origin, Definity, Blockstack, Filecoin. Take your pick on. Everybody has their own kind of strict views here, but at the end of the day, these are some of the most influential projects launching. Do you guys kind of dive into their token econ there, and do you notice any differences based on kind of the success versus those have it more thought out? Or
yeah, absolutely. No, it's as you both have been saying, it is such an open field right now on what's going to be successful and what's not. Because I would argue that even Ethereum, which is the most dominant smart contract platform, layer one protocol out there, unclear if Ethereum's token economic model is actually going to be successful here. To Ash's point, we've got the kind of ETH is money meme. That's possible that could end up being the model in the same way that we're seeing this kind of Bitcoin is gold meme drive towards success. But it could also not. And it may be that there's a different model required. And so for us, it's about, there's no training data here for successful layer one token models. You have to be reasoning from first principles and try and think about what might be successful and what might not. I certainly think that, and there's the difference between the token economic model and the consensus mechanism, but they're tied very closely together in many ways. On one hand, proof of work has proven out to be pretty robust with Bitcoin. And so it may be that makes sense for a smart contracting platform as well. Cadena is a great example of that with a kind of upgraded proof of work system. And it's also possible that, something that has the so-called work token model or a more staking-based model, or any one of the varieties of that staking model is interesting. And it may be that it's a combination. I think on a little bit of a tangent here, one thing that's interesting is that you see exchange tokens being really effective at supporting their value in some way. But the way those exchange tokens derive value is usually from a combination of factors. So it's not a single mechanism that's saying the exchange token should be worth this much based on its cash flows or anything like that. It's this combination of different values and utilities that give it its value. And it's possible that that model could be successful as well. You were talking about Nervos' model. They certainly have a number of components that help them get to it. So all of that in a very long-winded way to say, we don't know what's going to be successful, but we try and do our best to reason about them from the ground up and figure out what has a chance at getting there and making a concerted argument internally about that. But it's a really interesting question.
I think just to add on to that, ultimately, I think a lot of these, the valuation methodologies, you won't have the same valuation methodology for every token or every coin in existence. The markets there are still quite irrational. What goes up, what goes down everything is correlated. I think as there are more methodologies introduced, Tom, you guys have obviously done a lot of work around this. We're going to be able to look at these different protocols, how they accrue value quite differently. I don't think we're there yet.
Yeah, no, I agree. I wish we could do the Wall Street-esque, let's DCF everything, or let's give a multiple to everything. I can't wait till we get there. I couldn't wait to leave at Wall Street. Now here I am hoping that we get some frameworks back in place to use,
Yeah, that's right. Yeah, I'm starting to see some emergence of like a token earning metric that's calculated differently across every different network. And you can start to look at kind of a price to earnings ratio where the earnings are calculated differently. But yeah, it feels like a very new understudied field right now.
Yeah, I think Chris Bernitsky and his team, I believe they put one out recently. I forgot the name of it. It was a couple of weeks ago, but it was definitely up that alley. I'm sure we could link to it in the show notes.
Yeah. And by the way, we'll take a bunch of resource and put them in the show notes for those of you that want to rewatch this or send it to friends after. We got a really good question while we were talking from Alex N, saying that it's been really interesting seeing different base layers approach their development from different features coming first. So whether it's EOS with kind of fundraising as its first feature, Tezos with governance, proof of stake as its first feature, Ethereum with smart contract development and kind of dev environments as its first feature. And then pointing out that in the long tail, these protocols all plan on implementing upgrades in some way. And whether you talk about ETH 2.0 or Tezos building up better smart contracting. And the question from Alex is, and maybe we'll start with Ash on this, do you think that the first feature of these protocols locks in their network effects, or do you think they'll be able to scale out of that initial meme and kind of reach a broader array of features?
Yeah, I do not think the first feature dictates the success of a protocol. Just look at Tezos. It wasn't probably until 6 months in that the DeFi sort of activity started, ramping up. And so I do think they're definitely important. I think you need to offer novel experiences or, figure out how you're going to either target net new users or sort of target the crypto native folks. But by no means do I think it's like, the killer feature, you're going to find it on day one. A lot of these base layers, upon launch, they're not launching with smart contract functionality, or, in Cosmos's case, it's the Tendermint SDK where, you're getting a ton of activity. So I think you could look at all of them and they all have sort of different approaches around, what they focus on initially. Security is obviously super important. But I'd say, by no means does the first feature or first announcement dictate, what the protocol is going to look like upon maturity, whenever that may be.
Yeah, Tom, any other thoughts on that?
Yeah, no, I agree with Ash. I mean, definitely think that these use cases come out of nowhere for the layer ones. So it's definitely, I don't think they'll stick to one over time. And I mean, kind of, you're making the bet there on multi-chain or kind of a few chain world. If you bet on a few chain world, a few chains have to cover all of these dynamics well. But I do think you can compare chain to chain on the features that Alex mentioned in his question. So if you're back to first mover, second mover, so fundraising on EOS, you're 3 years late there on Ethereum, raising for ICOs, it's not going to work. Governance with proof of stake with Tezos is interesting. But the question is, if upgrades become too often, you get voter apathy, you get people not reviewing the code because they just reviewed it last week. That's not happening with Tezos. It's every 6 months or a year or something like that. So it's better, but I think that you got to compare the use cases between the chains and figure out which ones works best, because some of the protocols do it better than others.
Yeah, that makes a lot of sense. Tom, I want to throw it back to something you said at the very top of the webinar here, which is you're thinking that a lot of competition is going to happen this year among these protocols. It's no longer going to be, skipping down the street and holding hands together. How do you think that competition is going to play out? What will that look like from a practical perspective in terms of how these wars, if you will develop?
Yeah, it's a good question. So it's been something I've been thinking about for a while, and I think it'll be far from professional in every sense. I don't think it'll be anywhere near professional. Definitely think Polkadot is going to attack Ethereum at some point. I spoke with Kyle Samani on this recently, and I have a post on Polkadot going back a year or two now, but I definitely think that, they kind of paraded as an interop play, and now they're kind of a smart contract play, and they've been getting kind of aggressive. That's fine. I mean, it's amazing. Bring us a new developer sandbox to use, give us new tools. That's amazing. But I do think that the protocols are going to offensively attack each other. I don't know how that is. I'm not a coder, but I definitely think there'll be some hacking wars, exploit bugs, don't help the community find them type things. And then just on the marketing social side, hey, Ethereum developers, we'll pay you more. We'll, build this here. We'll double your income. People are driven by incentives, and I think money is one. And I think that these layer ones actually have to prove to their VC investors that they raise money from $1 billion valuations, that they can actually attract users. And the only way to do that is to either bring them on from the outside, which we really haven't seen. And to be honest, we shouldn't. It's to be abstracted away, or attack the existing protocols and take their devs and users from them. So I definitely think we're going to see a large uptake in that moving on.
Yeah, absolutely. Ash, any thoughts on competition and how that's going to develop?
Yeah, I think it's tough to look at today because there are few teams who have just thrown money at it, and it's bring your DeFi protocol or DeFi dApp over to X protocol, and I think that's worked to an extent, but honestly not a ton. And so it'll be interesting to see sort of as this next sort of wave of base layers launch. I'm sure they're going to be doing similar things, targeting DeFi teams or, Maker, you name it. Will that be successful? Yeah, maybe to an extent. But ultimately, like, your chain has to be performant. It has to have security. You want to see, mainnet live for a certain period of time before any of these teams would even port over. So does that, this wars, is it going to be going for what's working on Ethereum today? Is it going to be new entrants? Is it going to be more sort of top down, getting security, sort of just getting a ton of securities and assets on chain? I think it's going to be all of those. So it's something that we're definitely going to be watching very closely over the next 6 months.
Yeah, we'll put it in the notes. I wrote a post a little while ago hypothesizing about token economic attacks that different protocols could actually incentivize users to switch over, incentivize developers to switch over through economic incentives built into their protocol itself. So I agree with both of you, and Tom, especially to what you were saying. The attacks are going to happen across every surface, whether it's just kind of PR related attacks, whether it's tech related attacks and bugs, or denial of service, or even token economic attacks.
Andy, your post sounds very Black Mirror-esque.
It's very, it's Black Mirror for crypto. We'll post it over there after. It's I think there's a whole world of different vectors we could be seeing. I've got one last audience question here, and then I've got a last question for you guys. I know 45 minutes sped by, but we'll wrap it up to keep it short for the audience if we do a follow up. James Sowers asks, do you have an opinion, and Ash, maybe you first, and then Tom, on layer 0 being the answer for solving the scalability bottleneck in blockchains? And for those that aren't as familiar with that terminology, and of course it varies across the industry, when I hear layer 0, I think of projects like BlocksRoute that are aiming to kind of build a distribution network underneath layer 1, almost a caching network in some sense, that will allow that protocol to change without actually changing the technical aspects of the protocol itself. So that would be layer 0 scaling, as opposed to either building scalable layer 1 blockchains in the first place, or building layer 2 solutions on top of them that allow certain types of transactions to scale. But Ash, any thoughts on layer 0?
Yeah, and BlocksRoute is the first team that comes to mind. It's interesting. I haven't seen, beyond BlocksRoute, I haven't seen a ton of other folks that are targeting that layer 0 segment. And I think the tricky part is you have to get miners or validators and probably end users to adopt, and then maybe even protocol forks in some cases, and maybe some not. So yeah, I think it's really fascinating to watch. It's interesting that we haven't seen more of those approaches, and I think it just comes down to, how do you change behavior? If you're layer 0, do you have to go to the protocol teams? Do you have to get, the wallets and miners, sort of all three of those parties to buy in before, actually delivering on all these promises. But yeah, looking at the Blockshot team, super bright. They've had some really interesting early traction. It'll be interesting to see if others come in and focus on that segment. But I do think you need a lot of buy-in from those various groups.
Yeah, definitely agree with Ash. I don't have too many thoughts here, to be honest. I mean, Blockshot comes to mind. I think Solana is also focusing on their own layer 0 kind of enhancements there, but definitely think it's an under-discussed and kind of under-researched area. So definitely going to add that to our potential list of topics. Thank you, Andy.
endless list of topics. All right. Well, guys, I hate to make you do this, but Tom and then Ash, predictions for 2020. It's the new decade. On any time scale, this year or beyond, what are your predictions with respect to the smart contract wars and layer 1 protocols?
So I'll make a guess that Definity never launches in 2020. I think that's kind of, I think that ship has kind of sailed at this point. Definitely think the smart contract wars are going to get extremely aggressive and obvious, and they will be a very obvious war there. I think hand-holding is done. I think founders saying LOL on Twitter as they reply with some knowledge-based answer is going to end. I really think it's going to be an interesting 2020, and I'm excited to see who's left standing at the end of the year.
Amazing. Ash?
So yeah, I have a few. I think DeFi is going to continue to grow. I'm not sure. I can see a world where something in DeFi breaks and it's crippling. I can also see a world where total value locked in DeFi goes to 5 billion by year's end. Another one is I think there will be 2 new entrants, base layer entrants to the top 10 network value, market cap, whatever we want to call it, that are about to launch or will launch in 2020. And lastly, I think there's going to be another killer use case. And, just being at consensus, like a lot of folks didn't know ICOs would happen. We didn't like DeFi. It wasn't obvious to anyone. And so I think like the community social token is component's fascinating. Like we could pontificate on what that may be, but I think we're going to see another sort of killer use case, and it's going to, I don't know if it'll be sort of the same scale as ERC20, but I'm optimistic it'll happen this year.
Ash, who do you think will get bumped from the top 10? And if you don't want to answer, I can give you my thoughts.
I think there are a few that do not deserve to be in the top 10. So
I think
it might be more than 2. It's tough to say.
If I had to pick 2, man, it would be Stellar and either Litecoin or Bitcoin SV. We'll see.
Well, guys, we're gonna hold you to these, and we're gonna have to do another episode in 6 or 12 months and check in on these. In the meantime, Tom and then Ash, where do people find you? Where can they check out what you're working on, follow you, and keep up with these crazy predictions?
Yeah, and Andy, thanks so much for having us on, and Ash, thanks so much for being here as well, and enjoyed the conversation. We're DelphiDigital.io, and I'm on Twitter as Shaughnessy119.
Yeah, Andy, Tom, this was fun. Thank you to the participants. I'm on Twitter at Ash A. Egan. Our website is accomplice.co. I'm try to be quite responsive, so looking forward to follow-ups from this webinar.
Amazing. Well, Tom, thank you. Ash, thank you. This has been a really fun discussion. I look forward to all the follow-up from it. Also, one last thank you to Justin Gregorius, the man behind the scenes at CoinList, who put this together and who you all are probably seeing at the top of your little webinar screen there. But Tom and Ash, thank you very much. This has been great, and look forward to following up in the Twitter sphere soon.
Awesome. Thanks so much, guys.
See you guys.
Bye, everyone.